G'day, Rudy here. Welcome to the create your own tank MVR inside your Australian Super. Well, I think Host Plus do it too, where they have some ETFs and ASX 300 share exposure. If it's your first time watching this channel, this video, I'll leave another video at the end about how I think you should be constructing a portfolio using the MVR ETF, which is the ETF that's exposed to the resource theme, which is going to be going on for the next 10-20 years. And so due to popular request, people wanted to know how can they create one in Australian Super. So I sat down with the rooster and we came up with we're just going to assume a hypothetical portfolio, so 100 grand. So the percent allocation, so 25% to GDX, 10 to ETP Mag, which is silver, 5% to ZIM, which is a platinum palladium miner, 15% to BHP, gives you your copper iron ore, 10% to South 32, gives you your base metals like zinc, a bit lower weighting to Linus, rare earths, and 5% to Pilbara for your lithium, and 10% to palladium, and 15% to Woodside. So I reckon that's a pretty solid, not too speculative. Could have gone higher up on ETP Mag or a bit higher on the Linuses, but I think as a balance, Woodside's down in the dump, so it's a good time to be buying him long term. Also, Linus and Pilbara have sort of run a bit hard too, so Paladin's just starting its run, same as South 32, same as BHP. Zim's halfway started. And of course these guys have bolted, but I think over the next 5-10 years they're going to bolt more. Okay, well thanks for that, Rudy. Alright, so what I've done is I've prepared. So if you were to go and buy that portfolio, so what I've done is, so you put in, I bought 3,000 South 32, I'll show you from the beginning so you trust me. So 191 GDX plus 128 etc. Okay, you get the gist. So if you put that portfolio together, this is what it looks like, which is like perfect timing to ask. Look at that, breaking out to all-time highs. So that's what we call a flat top broadening wedge that breaks in the continuation of the prior trend. So, well, actually, if you were trading this thing, you would have, say, the real entry. Well, like everything on, like around June, which is the same. That's when MVR sort of, I started pushing it. Okay, so well, that's good, Rudy. So the individual holdings, so GDX, so that's your global gold miners on a rip. Could it pull back? Yes. Will it go higher? Yes. Same story with ETP Mag. Obviously would have been a lot better listening to the channel earlier, but could it pull back? Yes. Will it go higher? Yes. BHP, come on. Okay, so BHP, okay, so that's nice. That's just breaking out. Perfect. Got rid of all this congestion, consolidation, so it's on its way. South 32, same story. You're buying it at the bottom here. ZIM. So they're the palladium platinum producer, so they're looking good. Linus, okay, so So Linus is having a pullback, so good time to be buying him. Will he go higher over the long term? Yes. Look, it's a beautiful rounded, that it'll go higher over being super. It's going to be in there for a long time, so no problems. Pilbara. So Pilbara's just starting their journey. They're a low cost lithium miner, so that's fine. But we only had 5% to Linus and Pilbara. Then Paladin, so again they're breaking their wedge and they're making their way up, so again beginning of the journey. And then the King, Woodside, so he's getting smashed with the oil price at the moment, so look at where he used to be. So I don't know, there could be still some downside in Woodside, but you take the long-term view, and he's going to pay a 7% div into your super fund, so you can do that with what you want. Okay. So, I've done some additional work for you. We've been working overboard here with the Rooster. So this is VDGR ETF, which is basically your diversified index in Australian super, which is what a number of people said they were in the Australian diversified index, which is basically 70% growth, 30% defensive. So this is really the benchmark for your growth super fund. Okay, so that's what your super fund, if you're in that index, this is what it looks like. Okay, so compare the pair. So we take the made up MVR and we divide it by VDGR, and this is our ratio chart. Just like, there you go, you can see there. So it's that portfolio divided by VDGR. So like on the other videos, this is the ratio. So I would expect the same concept continue in the prior trend, just breaking out. Alright, how does it compare to, so this is the King, so this is what everyone's familiar with, or the tank I should call him. So that's him. So how do we compare? Okay, so this is the portfolio versus the tank MVR. So that's because obviously a lot of it's more heavy, so it's got a bit more weight to the, like a lot more weight to silver, because there's no silver in MVR. So again, it's another continuation pattern. I'm not saying sell at MVR, and well, you could if you wanted to and make this portfolio, but I would expect this to outperform the tank, because he's just full of, I guess you'd call it a combo ninja tank. But anyway, it's trading sideways at the moment, so you'd expect that versus MVR. And then if you're someone who just say you ticked the I want to invest all my super in international shares box, VGS is probably a good proxy for someone who's done that. So that's VGS. And if we do the comparison, so again, it's that portfolio that I talked about over VGS. So it's now starting to outperform the international shares option of your super fund. Alright, so yeah, I don't know, get your calculator out depending on how much money you've got. Yeah, I just use Excel, but I don't know how to give it to you guys, so I'm sure you can work that out. But also, in having a look around there, were a few ETFs which I don't mind, which is this EMKT. I'm pretty bullish Asia. In this ETF's so it's got exposure to China, Taiwan, South Korea, India, Brazil, but it's looking at the smaller cap players with a value, sort of a factor weighting thing. So companies such as value, low volatility, momentum, quality. So it's not just a pure like buy the big index one. So I like that. And the other, well, there's two areas of tech which I reckon have legs still, and that's the semiconductor space, because we're going to need chips, but they're going to run AI. So I like this semi ETF, and that's, well, there's that flat top broadening wedge pattern that this portfolio I've put together is doing. Future, you know the story. Future guidance is not always going to happen. Blah blah. And the other ETF I like is Robo, which is in there. So there's obviously robots are going to be taking over the world. So, you know, mix that up with that resource share portfolio there. Alright, I hope that give us some feedback. But I reckon it's a whole lot better than diversified index box, or especially a balanced fund or whatever. If you're unsure, I mean, just go 50-50, stick with your ticker box option and try this. But yeah, alright, just trying to help you guys. So yeah.